Good morning, everyone, and welcome to the 2021 edition of our series, Fintech Fridays, brought to you by BDO Australia. My name is Tim Aman. I'm BDO's Global Fintech Leader, as well as the National Financial Services Leader. Today, we are diving into the world of Insurtech. Before we kick things off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but you'll be accepting questions throughout the session, and you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we'll follow up with you after the webinar concludes. If you are experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, the session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for each of us. In a COVID-19 world, both technology and insurance have never been more important to the lives of Australians and intact globally. A revolution of the insurance sector is being seen, with insurers and insurtechs beginning to work collaboratively to combine their capabilities to include one of customer centricity, intelligent processes, product agility, and an open ecosystem. And today's Fintech Friday will be delving into this journey. I'm very happy to announce that I'm joined today by co-founder and joint CEO of Open Insurance, Jason Wilby. Open launched in Australia in 2016 and is a global AI-powered platform that issues and manages insurance products on behalf of underwriters, making insurance that's less costly and more reliable for consumers. Jason brings a unique perspective today, given Open's model to run both a consumer insurtech huddle as well as white labeling their products for partners like AHM. I'm also happy to introduce Ali Bolbol, who's one of our tax partners here in the Sydney office. Ali has over 17 years of experience providing tax consulting and advisory services. He has advised a range of clients in dealing with businesses, acquisitions, divestments, corporate restructuring, cross-border transactions, tax governance, and tax risk management with a focus on insurance. Welcome and good morning, both.
Thanks for having us.
Great to be here.
No problem. To begin, let's discuss the current outlook for the insurance ecosystem in Australia. Jason, from your perspective, what gaps in the insurance market are insurtechs filling or on a quest to fill?
Good question. I think there's, I think when you spend a lot of time chatting to most folks about insurance, it's a category that means so many things to so many different people. But yeah, in the space that we're in, we spend our time in the sort of general insurance and retail space. You know, this year Australians will spend 20-something billion on car and home. It's a big ticket and a big category. And I think you can boil down most problems to two things. It's a category that people are spending a lot of money on, and probably don't want to spend any more money than they need to. So there's this big interesting problem around price. And then I think the other thing is we hear a lot about in the category is customer experience. Traditionally, it's a product that's sort of been slow and confusing and sort of this sort of necessary product. And I think as an industry, started to sort of fall foul of a bit of a reliability problem. How do you service hundreds of thousands or millions of customers in a way that's super reliable and in line with expectations? So I think most insurtech, we describe our mission as being very much focused on trying to create the fastest, best price insurance for the world. That's what our teams kind of continuously think about. How do we solve for customer experience and how do we solve for price and bring that together in really relevant, valuable products? But I think when you zoom out and the thing I love about the sort of fintech and insurtech ecosystems are there are so many. It's fraught with complexity, and there are just so many, I think, brilliant businesses out there that are actually tackling either trying to bring all of those things together or tackling kind of and really focused on small slithers of pricing or supply chain or claims handling or AI assessment, all sorts of different things. So it's a really rich space, but everything generally ladders up to those two key problems, I think.
Yeah, and so thanks for that, Jason. I mean, we'll talk a bit more about some of those points that you sort of raised, but as I was setting up for this morning's call, insurance, my home insurance showed up in the email, so it's it's a real live sort of event that happens multiple times in everyone's year, so I think as we go through the next hour, hopefully we'll bring to life some of the power of insurtech on just sort of everyday Australians sort of living. Ali, from your perspective, who makes up the insurance tech ecosystem, and what role do you think they play in maturing the sector?
Thanks, Tim, and hi, everyone. Look, the Insurtech ecosystem is made up of incumbents, the general life and other insurers, fintechs, third parties, and the government is part of it. Each has a role to play in the development of a transformed insurance system across all subsectors of insurance. So insurers, brokers, managing agents, all those who play a part in insurance have different roles and objectives. What we're seeing is, as in the realm of other fintechs, partnerships are really important and hold the most power in transforming the insurance system. The government has a role significant that it'll play in creating supportive legislation and also supervision, for example, APRA, as well as access to funding and enabling players to come in. It really depends on ability to fund. The Insurtech itself can be broken down into what I'd say are three groups. The enablers, which are those insurtechs who provide software solutions and make the perfect partner to existing insurers, the incumbents. Distributors and insurtechs who dispense insurance and products, those that provide consumers with information and compare providers, and those full carriers that develop both and distribute insurance products. But it completely, changes in the way that they model their current business for incumbents. And these types of full carriers, it's harder for them to integrate with their legacy systems. So, as we go through today, you'll see there are some challenges. And there's also a requirement for capital. So starting from scratch, it's quite difficult as well.
Yeah, so you raised a couple good points. I mean, we'll talk a little bit about some of the challenges. Jason, just coming back to you. I mean, we were talking before we came online, the fact you're in the Freedom Belt in New Zealand, and when I did my last Fintech Friday, I actually did it from Auckland, and then I flew back into Sydney, straight into lockdown. I'm really enjoying myself. I guess if we look at the pandemic, clearly, it sort of changed customer expectations. And I know on a few other earlier sort of Fintech Fridays, we talked about payments and contactless payments, but I think if we're focusing on insurance, we're starting to see some different expectations from customers. What do you think is sort of driving this key priority in the insurance space? And from an Insurtech perspective, what tailwinds do you think are driving this sector?
Yeah, I think COVID across the board, across most industries, is definitely accelerating kind of a shift to digitization. It's just necessitated it now, and I think insurance is not immune to that. Australia is quite interesting as a market. It is very mature. I really genuinely think about it as, I think probably the UK is the most mature in terms of online distribution sales of general insurance products. In the UK, there's the vast majority of insurance, car and home insurance, is bought online. Those companies haven't actually digitized the rest of the back office, which is kind of the big opportunity. And we sort of see insurance really as a digitized model end to end. And then if you come to Australia, Australia's pretty close behind the UK. Most insurances, or the majority of insurances, is bought online and over the phone and very kind of simply in Australia as well. So I think versus markets like the US, where most insurance is still bought through brokers, and you can kind of be an Insurtech in the US and you say, hey, we've invented online insurance, and people sort of pile in. So I think you've got these differences in different markets. I think from when you look at just coming back to Australia specifically, COVID is certainly accelerating demand for more online services. I actually want to, we had since day one, we've had a significant focus on digital claims. Last month, just under 70% of our customers chose to lodge and manage their claims entirely digitally without speaking to a human. And so there's kind of this clear preference, but we're seeing that uptake increase more and more as a result of COVID. It's shifting expectations, it's shifting the market. Other categories are having to respond to that need to be able to do things online, and that just kind of those expectations then shift, from banking or from even grocery shopping into insurance and other areas. I think that the tailwind from an Insurtech perspective, or someone working in fintech, is I think you used the word, I'm in the freedom belt being in New Zealand. I sort of think in some ways we're in the freedom belt just by our nature of being new and a technology focused company in this category. We're unencumbered by legacy technology and legacy compliance issues and legacy issues that you find in the large incumbents. And I think that's probably one of the most valuable tailwinds for any Insurtech that's operating today.
Yeah, I think you touched on it, I guess, in terms of, you've got that freedom as an Insurtech. And if we shift a little bit over to incumbents, I guess, what do you think that they need to do? Like, you're starting to see this a little bit more predominantly in the banks, so you see, Westpac and CBA, ANZ, they're all in the paper in terms of partnering a lot more with, some of the fintechs, which traditionally have been disruptors, but now they're trying to weave them into, kind of what they're doing in terms of one of their innovation hubs. What do you think is going to happen from an incumbent perspective in the insurance sector?
Yeah, I think you're sort of seeing similar things play out. I think, as an insurance business, I think there are two things. You can either completely reinvent yourselves and go back to basics and say, hey, we are going to be a tech business because we are an information business. And I think for most large incumbents, that's a pretty kind of, that's so far away from the core business and the core capabilities today. And so I think we are already seeing and will continue to see kind of more and more partnerships. We partner with Hollard in Australia, right? Hollard runs, has I think it's now Australia's fourth largest general insurer. Lots of lines of business, lots of distribution expertise. We partner with them and access parts of the market and solve customer problems that that are adjacent to their core business. And we've done that we've got a similar model in New Zealand that we're replicating here with Tower, which is really exciting. And then our next market will be the UK. So, we're big believers in partnership. There's we think of the role that we play in terms of digitizing the actual product and making a product programmatic and making it available in channels and contexts where customers want it, and we can solve those, coming back to those price and experience problems. But there's so much capability at the insurer level: reinsurance, major events, catastrophes, market look-through pricing, capital management. It's a brilliant partnership. They take a lot of the heavy lifting complexity, and it enables us to execute quickly on some of those core problems that we're trying to solve. And I think it's a win-win, right? There's shared value throughout that process and throughout that partnership. So, and I think the success, I can only talk about our business, but we're growing rapidly, and it's good for Hollard, it's good for Tower, it's good for us. I think we'll see more of these sorts of partnerships start to emerge as well.
Yeah, and I think we'll touch a little bit more on on partnerships a little bit later, because that's obviously quite a key decision, and we'll talk a little bit about your journey in a few minutes. Ali, if we switch back over to you in terms of, there seems to be, when people talk about fintech subsectors, some of them are quite well known, and again, coming back to payments, everyone's very familiar. It's, you probably, even my 17-year-old son could talk about, a fintech that's a payment, sort of platform. Yeah, in terms of Insurtech, that probably hasn't had the same level of, walking down the street, the same understanding for people. And I guess in terms of, from an innovation perspective, it seems like we're not hearing about some of the innovation. Why do you think that this is?
Yeah, I think you're right, Tim. Historically, the insurance sector has been particularly slow to uptake technology. However, they also have the most to gain, I think. Being a sector that's heavily dependent on data, there's so much potential to not only create efficiency, but also create new customer experiences. Their main issues to adoption include things like, operational issues. They've got legacy systems and their readiness to implement, and, compliance issues. That's probably one of the bigger issues, particularly around privacy and probably cybersecurity. Even for those adopting tech, it's being used to improve, actuarial and pricing models. That's great news. However, its ability to influence products and design is where the real magic will happen. And there are other forces unrelated to implementing tech. Some of the tailwinds afoot in the last 18 months, for example, we've seen higher than expected payouts on BI policies. And as everyone's been probably watching that in the courts, there's a bit going on there, both in Australia and overseas around BI. There's on-flow costs in relation to COVID-19 for reinsurers and sort of what impact that might have. And we've also seen in Australia, for example, and now more around the world, things like natural disasters, the increase in natural disasters, bushfires and flooding in Australia, put on top of that COVID-19, and sort of, it's a real challenging environment for insurers, particularly GI. For life, you've got sort of the increasing age of the population, as a lot of the viewers know, and that presents challenges in itself in relation to sort of, older policies and book of business. There's also a volatile financial market. We see sort of had really good equity market growing in Australia, and I think fintechs have sort of benefited from that. But if you think about insurers, they're really investors, in bonds and the share market. So interest rates, spreads, and the decisions around the RBA makes and things like that. That's all relevant, as well as the Australian dollar. The strength of the Australian dollar is also relevant in terms of bonds. Also seen, regulatory issues and accounting standards like IFRS 17, and the implementation of that as a new standard has been extended now. But there are costs and potential effects on reporting information and how that has flow-on effects to dividends and shareholders. And also highlights probably unprofitable business lines, which is probably lost at the moment in terms of how it's reported. There are areas that are favourable to Insurtech have been, strong equity markets, quite important, and the high interest rates that I've said. So, yeah, look, I think there are challenges, but there's also plenty of opportunities there.
I think it's quite interesting, because I think, if you list out that laundry list of issues in the sector, it's probably a little bit easy if you're an insurance big company to say, is now the right time to spend on innovation, because it's not as easy as just saying we want to do it. I don't think anyone can debate, the innovation is where companies need to go, but it's just the number of activities that are sort of on the agenda. So, I kind of look at it as it's a great opportunity for the companies that can innovate in turbulent times, because they're going to put themselves in a lot better position when things come back to a level of normalcy. So I think it's going to be interesting in terms of who's going to be brave to continue to innovate. And I think if you flash back to even the GFC, a lot of great innovation happened around that time. So I think when we look back in a few years' time, the companies that have really embraced this opportunity to innovate, although there's all those other factors that are in play, they're going to be well placed, I think, to be, the next generation of stronger insurtechs, that are linked in partnering with the bigger companies. So, I guess we'll wait and see. And I think, we'll talk a little bit about, I think there's, in the insurance sector, there's maybe a little bit more wait and see. What are we going to do? And I think we saw that with the bigger banks. Now I think the bigger banks have decided they waited too long. Now they have to just sort of really get in there. So I think insurance will take a slightly different approach than say the bigger banks. Jason, now maybe we just talk a little bit about your story. Can tell us a little bit more about Open and sort of some of the key achievements that you think your company has sort of accomplished since 2016.
Sure. I'm reflecting. I mean, I like the list there that Ali just provided, and a few times, Jonathan Buck, my co-founder, we started this business in 2016, and quite often we sort of wake up and go, how do we create an insurance company? It's pretty. I mean, we're not a regulated insurance company, but we run a business that effectively has the P&L structure of an insurance company, and it's actually really complicated. It's if you love complexity, it's a beautiful kind of problem space to act in, because when you break down an insurance P&L, just kind of, as Ali was chatting there, I was just sort of thinking it through, and you go, for insurtechs or people that want to get into this space, there are quite complex drivers here. You've got to acquire risk, you've got to acquire customers. Every business has a cost to acquire a customer. You've then got to manage this policy and this customer over its lifetime. You've got to manage claims costs and the cost we're actually going to pay out to repair the car or rebuild a house, and that's so turbulent right now. You've got to manage the cost of managing that cost. So you've got your claims handling expenses, all these other drivers there. And then you've got cost of capital, and you're trying to find that kind of tiny sort of sliver of margin at the end of all of that. And I think to sort of reflect on our story, in all honesty, when we started out in 2016, we had this thesis which still holds true today. And I think what we saw was, and what we believed was, that insurance was an information business at its core, and yet it had the lowest levels of, as a category worldwide, the lowest levels of spend and on digitization, on technology, and I think that, combined with this sort of customer experience narrative and sort of problem narrative, struck us as a really interesting space to get into. But we did start out in 2016. We came out of management consulting at the time, and you go, everything's easy when you put it in slides. And so we had slides going out of everywhere. And I think in all honesty, it's a complicated business, right? I think we thought that there would be more silver bullets out there and more sort of, I guess kind of like big bang sort of moments in digitizing a business. And in actual fact, there aren't. It's a lot of quite complicated incremental gains that are all interrelated. Get pricing a little bit better, that's great. But actually average claims costs have gone up for other reasons beyond our control. The price of timber just went up through COVID. So all of these kind of like complicated interrelated drivers, and when you're operating in very small margins, makes for quite a kind of complicated landscape. But I think we are 5 years in now, and we've been executing on that core kind of model for the last 5 years. This kind of core mission. We know the consumer problem we want to solve. We can't lose we can't lose focus on solving that problem. It's about speed and experience. People don't want to spend any more time thinking about or doing things with their insurance than they need to, and they certainly don't want to spend any more money on it. And how do we bring in also the some kind of focus on actually the core good that exists within insurance as well? And so we really focus on this mission. Let's create the fastest, best price insurance for the world. And we've been learning over the last 5 years. We've been really lucky to have a partner in Hollard and now with Tower as well, who've let us make some, few sort of go off chasing a few innovations that perhaps didn't pay off as we expected to. But overall, where we are today, we're 70,000 policies down in Australia. We've got some brilliant embedded partnerships with Telstra. Our flagship Huddle product, which is a consumer brand, huddle.com.au, that's now embedded within the Telstra flow. We sell that direct at huddle.com.au. We sort of embed that into a whole bunch of different partnerships as well. And we've solved a number of problems. We've got a great pricing advantage because we've automated the vast majority of our back office, which gives us a lower admin cost. We use data and connectivity with partners and through our flows to try and find other pricing advantage to be able to return that to customers. And we deliver, in terms of speed, we've got simple quote lines, simple, easy to understand products, and fast claims with our what we class as our instant claims digital claims service as well. And so we spent 5 years, I think, if I'm really honest, you're learning. It's a complicated business model, right? You're learning and sort of being in market, being with customers, transitioning from being in a consulting mindset to a sort of a doing in a much more kind of active mindset. We've had a few bumps along the way, but we've got a really strong business now. We've got great unit economics. We're scaling into New Zealand. We're scaling into the UK later on this year as well. So it's exciting. But it's I think for people that are sort of like looking at the space, one of my biggest kind of lessons learned, I think, is be ready to sort of embrace I guess the sort of interconnected complex problems that exist within the product and the category.
Well, it's a fantastic story, and thanks for sharing that. I mean, I think it's I think for me, it's you've got to embrace the chaos, and probably, in the choppy waters, because I think you've got to go on a bit of a mission. Now I think you look back 5 years now, you've got a great foundation, which allows you then to expand into the other markets and allows you to continue to innovate. So you're probably at that place where you can do that. But I think, when we finish, I'll look for your last bit of advice for the aspiring Insurtech sort of out there. But I think, if anyone has any questions, please send those through, because I think the journey to get to where you are, 5 years goes by, quite quick, and you probably have, if you reflect on that, you'd be quite pleased in terms of how far you've come. So well done there. Just, I guess, switching slightly topics, in terms of your company, if you look at social consciousness, obviously, a lot of customers and consumers want companies with a social conscious and quote unquote, kind of that care factor. I guess, what are you doing in terms of creating a positive impact, on that front?
Sure. I think it's two things come to mind. One thing that I always think is really interesting. We as a company, we're recruiting a lot of people to join our teams, engineers, product managers, people from growth and other fintechs. And often we find that through the recruitment process, people haven't really thought that much about insurance. They're not coming from an insurance background. And when we often see this light bulb moment go off, and we see it with customers as well, when people really stop and think about insurance and say, insurance is basically people putting money in a pot to help each other out when things go wrong, and its simplest form. And I think it's really interesting. There's a category, like people often go, oh, insurance, it doesn't generally kind of like engender kind of like warm, fuzzy feelings. But when you break it down and look at what it is a super, super purposeful and positive kind of industry. Sure, it's got some problems, right? There are all sorts of issues that have sort of bubbled up over the last few decades. But at its core, it's facilitating people, making it possible for people to help each other out. And I think that's one of the things that attracted us in the first place. That the sort of idea that there's this sort of $20-30 billion category, people don't really like it, but they've sort of lost the kind of like the understanding of what it is. And I think that was attractive when we started going. The other thing, Jonathan and I, when we were setting this up I think we started in 2015 and kind of founded in 2016. We had a really strong view. We've been working together for a long time, and we sort of knew what we wanted to do more together, and we defined that before we actually defined the business model. And we worked out that we were quite happy with profit and for-profit businesses, and we enjoyed working together. We wanted to create a business that had was be fun and interesting, and a good problem space and problems to solve over the coming kind of years and decades it would probably take. But it was also really clear to us that, hey, if we're going to do this, like, how do we genuinely leave a positive, create something that has a positive impact? And so we figured that we had these goals in 2015. About 2016, there was this movement emerging in the US called the B Corp movement. I don't know if you've heard of B Corps before. It's a movement that came out of the US, and it immediately made so much sense to us. It's basically it's a process to kind of independently certify a for-profit business, and place some governance around how you operate that business so that you can achieve a positive impact. It's really quite simple. So if you're saying you want to achieve a positive impact, you go, great. The first principle is you have to measure your impact. Otherwise, you have no idea whether you're achieving a positive impact or a negative impact. And so we became a B Corp in 2017. There are quite a few B Corps now around the world. There's sort of B Corps like Patagonia is probably the most famous one, the clothing brand. There's about 2,000 or so B Corps around the world. And we did that to create some governance around this idea of it's easy to say that you've got an intent to have a positive impact, but we needed to create some governance around measurement and kind of harnessing that and making sense of that. And I think we're 5 years in. It was very. We became a B Corp in 2017. We're just going through recertification now, and we've gone from I think there was probably 5 employees back then, and no revenue and no real expenses. And so it's quite easy to measure your impact. Now we're doing kind of tens of millions throwing through the business. We've got a team of 50, a fairly complex supply chain. And so it's actually really useful as the business grows. It forces us to kind of go back through, to look hard at our business and look at the impact we're having across the stakeholders, thinking about not just shareholders, but what's the impact we're having on our team and our people, what's the impact we're having on our customers, how do we measure the impact we're having on the planet, and then also our communities. So that's kind of how we sort of made sense of that that intent to have a positive impact. And then, perhaps in a more tangible way, we signed up to 1% for the planet, for example. So we commit 1% of our revenue to be invested in organisations and NGOs that are solving complex problems for the planet as well. And then we have a few other initiatives that we do throughout the year under our Give Back umbrella as well.
Yeah, so it's obviously fantastic. I mean, I think you can kind of see some big corporations might take COVID as an opportunity to focus on meeting their carbon emission targets, which is probably convenient considering no one can actually travel. But I think if it's part of the fabric of the business, which obviously it sounds like you've built that up since you've started on day one, it puts you in a very good position, because I think that trend we're starting to see across all sort of fintech sectors, that younger generation, and I'd include us in the younger generation. People want to give back, to sustainability, but particularly in that under 30s, it's very, very topical with our younger staff. Being mindful of time a little bit, we only have about 30 minutes to go. We have a few more topics that we want to kind of cover, but so Jason, I'll just jump a little bit to open insurance, and I guess maybe you can talk a little bit about open APIs and from your perspective, how is that really driving collaboration in more of an integrated ecosystem?
Sure. I think open insurance is it's no coincidence in terms of our name and what we're focused on. And I think it's I think we and the broader market is really just starting to scratch the surface on this enormous opportunity. If you think about the core problems that we talked about, I keep coming back to these ideas about how do we solve for price and experience in a product that is at its core a data product, it's an information product. Our kind of core strategy is to enable those products to have really, really high levels of connectivity. How do we make it so that your car insurance can update based on how much you use your car? Not by having a proprietary dongle that we put in your car, but by enabling the product to have APIs that can be connected to the car or to an app or to some third-party solution. How do we take one of the use cases on our home insurance? We've developed APIs that enable other partners who have access to spend data, for example, to keep your home contents policy up to date. Hey, I can just see that you spent $5,000 at Apple today. You probably bought some expensive things that need to be added to your contents policy. So the core idea for us with open insurance is basically improving data flows so that we can improve the price that a customer pays for their insurance, which could be usage based, it could be a better insight into risk, but we can take that data and bring it into our core models. Or improving the customer experience, keeping the policy up to date. There's nothing worse than paying month after month after month of premiums, and then actually when something goes wrong, the policy was I forgot to add X, or I didn't tell them why. So our kind of core goal here is to enable the highest levels of connectivity. The best data flows will result in the best price and ultimately the best customer experience. So we do that today in a number of different ways. When we embed our products, we made it very easy. We've created this sort of plumbing, really, pipes is the way I think about it, that enable partners to share data with us to help their customers get either better prices or access experiences. Sometimes it's just as simple as pre-filling a quote, so the customer can say, hey, you've already got my address, my name, my date of birth, and all these things. You've done the heavy lifting for me. I can see my price, and I can finish off the last few steps myself. Sometimes it's a partner that has a unique view on their customers that enables some of those customers to unlock further discounts, for example, because that translates to better price and a lower claims frequency. So there are different ways that we bring that to life through the kind of core embedded model, but increasingly our strategy is to open up these APIs, make them public, make it possible for our customers to access their policies programmatically, make it possible for a customer to download their underwriting data. Frankly, they can take it off to another insurer. Maybe it makes it easier to switch. We just want to embrace this kind of this world of thinking about opening up, increasing data and information flows, and ultimately that driving better value for customers. One thing I would say is that it's interesting, we're spending a bit of time looking at our UK market entry at the moment, and it's interesting looking at the UK and Europe right now. They had the focus on open banking a few years ago. It's very much about open finance now, and I think in Australia we're talking a lot about open banking. It's really open finance. All of these products can be very, very smartly interconnected to create better value for customers. Because actually, banking data and transaction data could help with insurance. Insurance can close the loop on payments and other places as well. So I think we're very focused on insurance, but it's actually really exciting to think about the potential if we start to join up insurance with other financial services as well.
Well, I think you touched on a little bit about the open architecture, and obviously open banking has just celebrated sort of its 1 year being live here in Australia, and it seems as if things started in the UK and Europe, moved down to Singapore, came down to Australia, changing of the name. I was down in New Zealand a couple weeks ago. They talked about open banking, so you can see things are flowing down. Eventually they'll make it to Antarctica. I guess in terms of what are you expecting is going to happen in Australia, I guess, in terms of CDR applying to insurance, because right now it's a bit of a slow, it's in banking, but some of the concepts you're talking about, when do you think that's going to start happening here within Australia?
I mean, from our perspective, we're making our policies open. We're effectively delivering. Every month we release features that will more and more deliver on that. I guess completely kind of open access to customer information. I think that the driving force in Australia is really interesting. When you look at telco, for example, I think it would have been 20 years ago, the government realised that you're not going to have any competition in telco if you can't take your phone number with you. And so they mandate you've got to be able to switch it in minutes or whatever the sort of SLA is. If you want to switch from Optus to Telstra, then you've got to make it possible for that customer to switch their phone number and not kind of lose any disruption. The same thing started to happen with banking and portability there, but it was kind of a bit choppy, I think. When I think about CDR, it's ultimately about improving. It's ultimately about improving competition, like an access, and insurance is really tricky in this region. We have the highest levels of concentration in Australia and New Zealand between two major insurers, and I think in order to have a meaningful conversation about CDR and insurance, that comes from a place of kind of like actually wanting to increase competition and increase the kind of flexibility from a customer perspective to be able to switch their insurance, reduce the friction, and reduce those barriers that are holding people back. How quickly is that going to happen? Big powerful forces, I think, in the market. So I mean, we as a challenger that's growing and can see the kind of the barriers that the consumers have to go through to access alternative products. We would love to see those barriers fall really, really quickly. I don't know how high it's sort of bubbling up the regulatory agenda at the moment, though, given everything that's going on.
Yeah, there's obviously lots of activity, but I do think there's some natural extension, as you mentioned, in terms of some of the information that with open banking can naturally be linked quite quickly to kind of open insurance. And I think if we start calling it open finance rather than banking, I think that's going to open things up, quite quickly. An exciting time. Obviously, you're well placed because you're already doing things from an API perspective, and I think that's going to be, you can see even with the banks, it's a slow uptake in terms of making APIs open, and part of it's that legacy system issue that they're faced with. So you can sort of see where that partnering is going to happen again more quickly, because having a solution that already has open APIs, people are going to want to deal with that type of company rather than having to kind of build that from scratch. I wanted to move on to technologies, because obviously that's the interesting part about one of the insurance, one of the big focus areas of Insurtech. We do have a polling question, and I think, Maddie, if you want to just kind of put that up there in terms of what do we think is going to be the key focus areas that's going to be the most value for insurers. Jason, you mentioned sort of back office, and so I sort of expect that should be will be the number one choice, but we'll wait and see in terms of what they come back with. Ali, what do you think people are going to come back with in terms of this poll?
Well, it's interesting because you think about from a consumer perspective, probably caring organization seems to be one of the important things, as well as digital customer experience. But if you work for an insurer or in sort of the business, you might start thinking about real-time responses and back office processes, you know, like they all sort of work hand in hand, don't they?
Well, I think part of it is, and Jason, maybe you've seen this a little bit in terms of the change management piece. When you're talking with, an incumbent, getting people that are working for that company to be comfortable that automation is actually going to make their life easier rather than worrying about the potential in terms of job loss. I know that there's that constant fear. Have you seen that much with incumbents that you're talking with?
Yeah, I think it's definitely a concern, isn't it? There's a narrative in sort of the media and the press and kind of general kind of conversation about AI and automation and taking away roles. But I think in reality, you've got rising expectations from customers, and so I think my view is that problems are inevitable, right? There'll just be more problems and other things to solve. But it's largely about responding to to kind of different consumer demands. So for those large organizations, I think you'll see shifts in the sort of skill sets that they have, and a greater focus on automation. But I'm sure that they'll uncover further work for those people to do in reality, rather than kind of some sort of mass sort of job loss or anything like that.
So if for the accountants in the room, well, that would be me, you can see that they don't add up to 100% because people could choose multiple answers. So I guess we shouldn't be too surprised there. I guess it's a little bit surprising that the new products piece, but I think those other four make a lot of sense in terms of from a starting point. So Jason, maybe just talk a little bit about the technology, and particularly maybe you talked about the car, the toggle, etc. But I know obviously you've got connected insurance, and maybe you can talk a little bit about AI and where you see that sort of taking the Insurtech industry, and maybe just give the application to connected insurance with the car.
Yeah, sure. So I think AI is a term that's banded around a lot. I think often means many different things to different people. We generally sort of talk about automation, and then kind of ideally kind of learning models and self-learning intelligence. But ultimately, to run an insurance policy, there are lots of kind of decisions that need to be made, right? Do you accept the risk? What products might be right for the customer? Do you prevent the customer from maybe configuring a product in a particular way because maybe it's unlikely to meet their needs? What price do you charge? There are literally hundreds and thousands of kind of tiny and interrelated decisions to optimize throughout the product life cycle. And I think a lot of those decisions, pricing, for example, mostly in consumer products has been automated for a long time now. It's algorithms in machines, you send some data in and you get some data back out. In most cases, not the realm of AI or machine learning. Those models are not sort of self-learning and updating. Some are, but in most instances they're not. The other end of the spectrum, I think you've got in our world, we wanted to we want to focus on a very fast and heavily automated claims experience. And so generally claims are managed by claims officers. Tell me what happened. I know some business rules off the top of my head. There might be some business rules on a cheat sheet next to my computer. I'm going to fill out some forms and I'll kick off some workflows. That's what to us is one of the most exciting applications for machine learning and AI, is to go, how do you take intelligence, which is often learned and sort of a lot of wisdom and based on a lot of other cues and kind of context, and try and outperform that with machine intelligence. And that's something we've been doing since we got started in 2017, is building machine learning models to help us progressively and help our applications progressively get better at deciding which claims can just be auto approved, and which claims need to spend some time with a consultant talking through in a bit more detail. That's really exciting, because it solves both of those problems I keep coming back to. It solves experience, makes it faster. Do it online, boom, oh, it's approved. I've just got to book my car in for repairs. Great. It also helps reduce admin costs. You get the products over time, becomes less expensive to administer. So I think that's a really kind of like powerful application of that sort of technology. The coming back up to pricing, and actually just sharing a little bit about our story and talking about the management consulting mindset at the beginning of this. We're like, how do we solve fraud? How do we kind of we can build AI programs and models that can help us kind of detect and understand where there's fraud within our customer base. And if we can do that, we can reduce the cost of claims, right? We want to get rid of the fraud. What we learned is the modeling bit wasn't the challenge. It's actually what you do with that information once you've got it, right? How do you actually say, hi Tim, there's something a bit unusual about your claim, and generally when there are people, bad actors in the system, it's a very unique kind of human to deal with, and very lengthy, and becomes a very, very costly process. So we've shifted some of that sort of intelligence now to actually trying to help us understand how can we avoid potentially writing policies or offering products in particular in very, very, very specific circumstances, where we might have seen a pattern of behavior with a particular card or IP addresses or other things. Machines are really good at making sense of these vast data sets and helping to sort of reduce some of the probability of bad actors getting into the system. So those are just two examples, but they're very, like, there are sort of 100 more that are much sort of smaller, that sort of exist throughout the value chain. But ultimately, what's really interesting is generally any application of those sorts of technologies generally, is both improving the customer experience, but ultimately the price as well in some way, shape, or form.
Yeah, I think when I looked a little bit into the connected insurance, I was thinking this would be useful for my son as he drives away in my car, and I have no idea how fast he's going. So you can sort of see where there's going to be some, if you take the practical experience of 17-year-old driving, and the insurance premiums are absolutely through the roof until 25. Well, should that be the case? And so I think there's going to be some natural opportunities where this AI learning is going to be quite useful in terms of practical applications to premiums. Ali, from your perspective, what do you think are going to be the critical areas that are going to be impacted by Insurtech? I mean, Jason's sort of alluded to pricing. In terms of how do you think this is going to factor into some of the back office and some of your clients that you work with?
Yeah, look, I think Jason's touched on a lot of the stuff. I think the critical piece is insurers using the technologies and trying to meet consumer expectations by deploying at scale. Insurers' focus should be on finance and strategy. They need to focus the strategy as part of their broader digital innovation strategy. It's vital that all parties share a clear understanding of their business problems and how it's being solved. People successful in Insurtech development require a strong champion in the insurer's business and someone with a clear vision and the ability to challenge. I think, execution is one of the things. A strong implementation plan and having roadmaps with timeframes that are clear are essential, but it's not enough on their own. They must also be supported by streamlined procurement process, flexible contracts, and systems and technologies. I think is quite important. The industry needs to move beyond taking like a silo type approach to delivery, and have to go to past those ideas of proof of concept and deliver true value. I think Insurtech requires capabilities from innovation, creative design, ideas, tests. So I think Jason touched on a lot of the challenges, and looking at it from a consumer perspective. There's also the challenge the incumbents and the Insurtechs have to sort of bring those things together and really deliver on what's probably a seamless solution and an expectation from customers just to be able to roll into things that just evolve. I mean, we're in an evolving landscape. Everything else has changed in the world, so insurance probably and finance has to come along the journey as well, and probably should start going ahead of the curve on that.
And I guess, if we take one of the practical issues, I guess, is dealing with the regulator, so in terms of, so Jason, you sort of mentioned you're not APRA regulated. Obviously, insurance companies are regulated. I guess, where do we think ASIC and APRA are going to be going in terms of embracing, I guess, Insurtech, and where do you guys see some of the potential stumbling blocks as Insurtechs become more and more kind of mainstream here in Australia? Jason, I'll start with you, and then I'll come back to you on that one.
Yeah, I think that's a really good question. It's we have an AFSL, so we have our own license for distribution, which governs, I guess, how we manage the distribution activities, and then we are claims as a financial service as well. So it's kind of an addition to our license now. So most of the activities we perform are on our AFSL, and similar regimes in the UK and New Zealand. But you're right, we generally don't have to worry. We don't have a license. Sorry, we don't have a license from APRA. But because of our business model, most of the obligations that are imposed on our underwriter actually flow through to us. So because we're performing, we're issuing products ultimately on behalf of a regulated APRA entity. Although we don't have a direct connection with APRA, most of the obligations that are imposed on that underwriter then sort of flow through to our business. So I think that may well be the case for any kind of Insurtech or having an awareness of those obligations, even if they're not directly imposed on you. I think is absolutely critical as a starting point. Where is it heading? I think it's really hard to pick necessarily kind of like the specifics. Personally, I quite like the focus that ASIC and APRA are bringing to customer outcomes. I think it's really hard for the incumbents. They're generally like people that work in incumbent. They're brilliant people. They care about customers. They care about doing the right thing. Over time, there are these sort of small pockets of problems that have emerged, and that's creating a lot of work for incumbents to be able to remediate and resolve. But I think from our perspective, coming into the category and saying, hey, we want to kind of like solve customer problems. I think, and most Insurtech should be kind of focused on the same. I think really, you generally should feel quite aligned with the regulatory environment, which is ultimately it's regulators saying, hey, how do we just make sure that these products are sold for the good of the customer and they're administered in a transparent and a transparent way that's that's in line with consumer expectations. I don't think that's a big ask. I do see though that the way that gets implemented can create it's really hard for incumbents to respond to some of the challenges that are imposed.
I guess you deal with the regulator quite a bit from in the insurance sector. I mean, what's your sense in terms of typically the regulators seem to be playing a bit of catch up with all the technology change and things are moving quite quickly. But how do you think that they're going to tackle Insurtechs coming more and more into the market?
Well, I think it's interesting because, as you appreciate, there are a lot of barriers to entry for new players in terms of setting up and having an insurance business. When I say insurance, I mean effectively, being the underwriter as opposed to just, a distributor or a broker or even a facilitator. So there's always going to be increased barriers to entry, and part of that relates to sort of the expectation and the legislative requirements around having capital and really being able to pay out claims and sort of being in a regulated industry. As you've seen, we've seen in the banking context, I think APRA will probably take a similar approach to what we've seen in the banking system. That probably applied varied they'll apply varied regulatory requirements according to the circumstances. And I truly believe there needs to be some tailoring of the regulatory requirements in relation to material risks and capability. So I think what people are seeing, because of the difficulties and the barriers, partnering is really important, as we've seen, Jason talking about in terms of open insurance. It's very hard to come in and set up an insurer from scratch, right? So you tend, you've got your incumbents, you've got your big players, and it's really about how do we partner. And I guess the question is there space in the environment for smaller players to come in, and what are the barriers, and how does APRA support? There's also the other lens, which is sort of, and Jason touched on it a bit around sort of, from a consumer perspective and what's seen to be doing the right thing in terms of, for example, claims experience and being paid and things like that. And that's sort of coming through now in terms of COVID-19, where we're seeing sort of business interruption claims. We're seeing people go to AFCA, for example. There's a lot of focus on, remediation of products as a result of the Hague Royal Commission. It's a very challenging landscape. So you have your consumer lens as well as the regulatory lens, but also, the broader issues around sort of, financials and stability.
And I think it kind of leads in nicely to one of the last topics, is around scaling and funding, and obviously there's been a lot of investment in Insurtech globally. We probably haven't seen that as much here, within Australia, but I guess probably two questions. One, Jason, for you, I guess maybe you can talk a little bit about your capital raising journey, and then Ali, I'll come back to you and ask a little bit about what do you think, what's changing from an investment perspective in Australia that you think maybe will drive some of this investment. Jason, I'll start with you, and you can talk a little bit about your journey.
Sure. Yeah, it's we went from, I guess, novices in 2016 to doing our first kind of initial raise. We bootstrapped for a while, and then Hollard came on board. We did a Series A led by Airtree in 2018, and I'll probably say sort of watch the space over the next few weeks for an update on latest developments. But the market is it is incredible. I think we're sort of 5 years in. A lot of talk about fintech 5 years ago, but it is incredible. You go across New Zealand, across Australia, across the UK. You look at the US. You go, the capital that is being deployed into fintech, in short, the broader sort of sense, into financial services, whether it's kind of challenger consumer brands and neobanks through to specialist kind of SaaS technology businesses. There is, there's an incredible flow of capital into this space at the moment, and I think every fund in the world wants to have some sort of position and some sort of exposure, and I think that's that's driven by genuine need. It's driven by unmet needs at the consumer level, which everybody can see. Consumers are being underserved in different ways and different pockets across financial services. And/or it's driven by kind of just the realization that we've got these incredibly large, important financial service institutions who have a very long shopping list of problems to solve, and technology that can be slotted in there. So, look, I think the main thing, my main takeout is, if you're whatever stage you're at, or if you're attracted to kind of to the space, capital won't be the problem. It won't be the issue. Finding the right fit and the right way to solve a problem, that will always be the complicated part. But there's no shortage of capital to either get going or to scale something now. It's a really exciting space to be in.
Okay. I guess, Ali, from an Australian perspective, do you think the investment decisions are becoming easier based on some of the government initiatives?
I mean, look, just my experience is that there's been a lot of interest in the Australian insurance market generally. Like, you've seen some of the really big, inbound type investment opportunities, like the Japanese many years ago were interested in, say, life insurance in Australia. Chinese have been looking at insurance, and that sort of changed recently over the pandemic a little bit. You've seen a number of banks divest their existing businesses. So we've seen a lot of activity in that market. In terms of sort of Insurtech and investment of initial capital, with such global support in Insurtech funding, the government, I think, has recognised that they need to do more. So we've seen in recent budgets, for example, that we saw an announcement of the review of the venture capital tax concessions, including venture capital limited partnerships, early stage venture capital limited partnership regimes. And given the appetite for Insurtech globally, you'd expect to see more foreign investment in Australian Insurtechs, especially given the Insurtechs are maturing in their pre-revenue stages. So we've also seen, for example, in the recent federal budget, that the government announced and pledged enough round funding of about $450 million over the next 5 years for venture capital catalyst initiatives. And so all these initiatives make an environment that's favourable, I think, for fintechs and thinking about getting additional capital. So I sort of, echo Jason's, capitals there. I think it's about the government really trying to encourage and make those investments easier, and so that we're competitive from a global perspective as compared to other jurisdictions.
Thanks, Ali. And I think, so now we're down to final question time. It's crystal ball, Jason. Fast forward 5 years, where do you think Insurtech's going to be in Australia? And I guess if you look at Open, where do you want to be? Where do you perceive yourself in 5 years' time?
That's an easy, not the easiest question. I think if I zoom out, I think one thing that often excites us as a team, I'm in New Zealand here. We've got half our team, a lot of our team here, and a lot of team in Australia. I think for Australia and New Zealand, my hope is that as countries, we're fintech leaders on the global stage. I think we've got this really unique opportunity, and in part it's because we're actually competing. Fintechs that are either competing or working with incumbents. It's a really, really high bar of innovation. Australian banks are some of the most digital, incredible banks in the world. CBA, Westpac, ANZ, their digital customer experience is far ahead of the US, so far ahead of the UK, that it makes it really challenging to be a neobank or a challenger in Australia versus being a neobank or a challenger in some of those other more mature markets. And I think similar, you've got similar kind of structures and patterns in insurance and across other spaces as well. So I think my hope is that in 5 years' time, I sort of think the Australia-New Zealand flag is world renowned for being a big exporter of fintech, and I think I hope that Open has a role to play in that, but I also think it's a very broad opportunity for Australia and New Zealand.
And Ali, any final thoughts? I know you're Mr. Insurance here. What do you think the landscape is going to look like in 5 years' time from an Australian incumbent perspective?
Well, it's really hard to tell, but like the reality is the technologies to transform insurance and the sector already exists today, and it's really the uptake of those technologies where we see would expect to see the biggest impact, particularly in areas of AI, as we've talked about, deep learning. From 5 years from now or 10 years from now, I'd expect the interconnection of these technologies will allow adjustments to insurance as people go about their activities. So maybe one day, in 5 years, you're driving a Tesla, Tim or Jason, down the road, and in the future, it's driving itself, and the route it takes can save you some money on your insurance premium. Go down the M4 and I might pay a toll, but I'll get a discount of $5 on my insurance premium because there's less lights that I have to stop at. So it's an exciting world. I think the expectation is that technology and financial systems will come together, and probably will in the future.
Yeah, thanks for that, Ali, and thanks for that, Jason. That brings us to the end of today's discussion. I want to thank Jason and Ali for the valued insights. I'm sure hopefully everyone thought that was a good session. You'll now see the details on the screen of our next webinars. We've got a great lineup of topics and speakers for the next 4 months and through December. Next month, we're going to be looking at wealth and asset management. I'm going to be joined by Chris Brickey, founder and CEO of StockSpot, and one of our partners in Melbourne, James Dixon. The details of the webinar will be sent up in a follow-up email from today's session. And if you missed any of the previous webinars, now that people are locked down, feel free to rewatch them during COVID-19. We're going to add the links so you can catch up. And before we close the session, if you can fill out a short feedback survey that will launch once we close the webinar, that will help us improve our future sessions. And so again, thanks Jason and Ali, and thank you for joining today's session, and hope you had a great Friday. Thank you very much. Have a good day. Bye. Thanks guys.
Thank you.
Thanks, team. Thanks, Jason.